I want to take you into just seeing buyers and follow the chart from here. And look to where buyers and sellers went through their thing. Don't worry about washes and gaps. Just kind of look for where there was a struggle. Maybe the gaps draw your eye. Look for where there was a struggle, all of that stuff. Look for where maybe the chart made a decision. This is a little bit of that creative aspect. This is a little bit, okay, you come to the chart fresh. It's a new day. You're a new person. It's a new market. What happened yesterday, last, doesn't really matter. See, every day you need to look at this chart, and we're here to trade. We're here to trade up. And in order to trade up, this is going to require a creative, unique solution. The lines are just there to kind of help us. So right off the bat, just follow it down and maybe see where things broke, see where buyers stuck, see where buyers swapped, sellers swapped, maybe see swings. June 14.8. Okay, now you guys, you let this soak for a minute. I'm going to mark this chart with what I see. All right, so don't worry if I'm muted, because I'm muted. I'm going to mark this chart after just looking at it. I'm just looking at it. I'm going to mark this chart with what I see. And this isn't a bad exercise for you guys to do because it's creative. All right, everybody get how I framed that up? It's much more interesting when I did it, right? And it's like, oh, okay, I see it. But you guys see how we took a market and this outside bar is the same as this outside bar. Same kind of thing. Okay, same kind of thing. This is a high, this is a high, and this is how I came up with a projection. So when I say we draw our median line sets, etc., with a certain precision, this is what I'm speaking of. We understand something about the swing structure. Okay? We understand something about the swing structure. And here's the model. All right, so again, this is process. I wanted to do a nice fundamental thing on process today, but we might only just barely get started. And we can even use, swings as we get here and approaching this. Now, this might not lift from here. It might. I don't know. But you can see how a trade decision can be made. This might just be, a type 2 and roll. It's quite possible. But when you come to the market, at least you want to be able to see. When I looked at this market, it looked like this is where everything started. As Grace mentioned, there was this big wash. There's its brother over here. But it looks like this is where everything made its decision. Right there. It looks like this is where it broke and said, we are just going down. But when you get to look at the whole picture, if you have to, just grab a box. And what I want you to see is the actual sellers making a new low. The actual sellers hitting it. Actual sellers. Actual sellers. They stretch it a little bit, but they're making higher lows. We've just got swings going on here. They stretch it, but they still, they zoom it, but it's still messing. Here, it's for sure, right? And it's the process of an MPL. It's the process of a valley. It's the process of a swing, a valley and a mountain, Nate. There's a whole bunch of things that are lining up. But when you come to a market, I want you to see this group of sellers here, right? And so the outside bar is this effort that gets reversed, okay? And it's down here. So it becomes a solid marker. It becomes a solid marker, right? Because they made effort up and they made a new low. So this becomes a line in the sand. And it was the same thing over here, even with this little one. See? Even with this little one, they're struggling. They make it, So this becomes a line in the sand for sellers. See them? Boom. Boom. See them stall, but they just drive right through it. So it becomes a line in the sand. So this little swing is the same as this. It's just in a smaller version. And so we can use it for entries, so on and so forth. Now, might this just keep rolling? Yes, there's a bigger swing rolling here on the way down. Might it? Sure. But this is still my line in the sand. And this is like where they've absolutely decided. Okay, this is going to be a quick follow-up to that clip from one of our live sessions from Language of Markets. At the end of the session, or at the end of that clip, you heard me mention this is where they absolutely decided, right here. Why is that important? Well, because that's where we want to get stops under. So we started out simply seeing seller, 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 sellers, seller, 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 sellers, swap, right? You can see the nature of this. And this is where the decision was made. And then swing. And then you saw me use these minor swings in the same way as a confirmation. But as we see, trading can get messy. It didn't confirm anything, and that happens quite often. I'll still use that for confirmation. But what's important here is we know where our stop has to go, one way or the other, and then work our money management. The truth of the matter is, it didn't matter. Once we understood this market, as long as we can afford the stop, it didn't matter if we entered here, 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 here. None of those mattered as long as you had the direction right and you knew where to throw a stop. That's always the starting point. We tend to get ourselves in trouble being or trying to be perfect and surgical and take no risk. And targets for this is easy. We use basic tools. You can use the median line. Price has a high probability of reaching the median line, or a modified shift, and you see it's doing the same thing for a target. So we learned that confirmations don't always do their thing, because after the session, this is where we left it off live. It dove down, gave us another hit. That's part of trading. If you get stopped out, you get stopped out, but you still want to know where a stop is, where a good stop is. And again, you know, trying to be perfect, where should I put the line? Should I have it here? Should I have it here? Should I get this little bar? Should I go down in time frame? It's all just ways to dodge risk. You know, I could have got real fancy here, right? I teach action, reaction, and all that. Could have got real fancy and looked for a nice center line like this. Action and reaction. So you can see I could have done all that and have it look like magic. And all these are good tools to learn and know about, but they're not magic. They're just trying to tell you something about a swing. That's all. They're just trying to tell us something about a swing. So there's a little taste of what we do, a little taste of when it gets messy, which trading will always get messy. And this was real simple. Sellers hit it, knock it down. Sellers hit it, try to knock it down. Sellers hit it, try to knock it down. Whoomp, right? They take it up above those guys, and then they swing. That's the first part of the process of pulling off a trade. And then from there, we risk our money, use the appropriate risk management, takes our chances. And so one of the points I was trying to get across in the session was trading isn't about memorizing setups and then just going from there. It's about looking, right? We need to learn the patterns. We need to learn the language of price so we can see the story that price is telling. It's not about memorizing and thinking this thing has a probability. Good luck with your probabilities. This is a moving, changing thing. Trading is about, we want to learn the language, and then we want to do what's appropriate when we see it, right? This was nice and simple. It's not a memorized setup. It's not a statistic. Sellers got beat. This is where they got beat. This is where they wouldn't go any further. Boom. And so trading can be that simple. We have to do some work to learn a little bit about the swings and the language. But it's not just a pattern recognition thing.